Dear friends, from now onwards, we are going to concentrate on the part of indirect taxes. Any difficulty? Tell me. Doubt? No doubt. Fine. So, dear friends, let us start with indirect taxes over a period of 150 hours. I am going to be present in front of you right from the basics to the advanced concepts of indirect taxes, where I am going to invite even tax planning issues. Once you sit in the examination hall with a question paper of CA, CMA, CS, as the case may be, for forthcoming examination of May 2021 or November 2021, you should say that I know the answer. Just take sufficient time to answer the question paper. Is our aim to look ahead. At the same time, you should also have to have determination to secure minimum 80 plus marks in indirect taxes. Well possible, because I am covering all the provisions in such a manner that just look and understand all diagrammatic presentations. Whatever may be the provision, up to the date as on 31st October 2020, all amendments has been covered in the material which I am presenting in diagrammatic presentation. Just look and understand. So, what is my requirement here is, you should have to have continuity. You should not miss any classes. You should not skip any classes. Because my all lectures are vivisect, one depending on the other. So in such a manner, I am going to present the subject in front of you. First, let us consider for discussion GST, followed by customs and FTP. 100 marks I am going to cover, just leave it to me. I am going to be cover here more than 500 numeric problems covering your RTP, MTP, past search answers, in addition to your study material. So, my dear friends, let us start indirect taxes. What do you mean by indirect taxes? Any idea you have with you? Hopefully. I know, people will have some idea about indirect taxes. Yes. Tax burden on one person, impact is on the other person. Namely, impact, levy and tax is the way in which you foresee the differences. But I am presenting here indirect taxes entirely different from direct taxes. One should understand that. How my indirect taxes different from direct taxes? First, once you understand that area, then you will frame the indirect taxes boundaries. Once you know the boundaries, for us easy to play within it. So in that manner, I am first bringing in front of you differences between direct and indirect taxes. I am going to explain to you much more than what you are keeping in your mind. Practically I am presenting. Let us look ahead first. Direct taxes. First point itself. Payer of the tax and sufferer of the tax, both are one and same. In the case of direct taxes, you are aware of that, I know that. Impact and incident are the same person in the case of direct taxes. When you ask me, I will say that in the case of indirect taxes, impact on one head, incidence goes to another head. It means to say that the payer of the tax different from sufferer of the tax. How one can able to identify this? Very simple, my dear. Live example, we are here. Take direct taxes. Assume a scenario, you qualified chartered accountant, appointed as a manager finance in a multinational company. Assume your monthly salary 1 lakh rupee. In a year, 12 lakh rupees. On which you have to pay income tax. That means payer of the tax, yes, by you only. Sufferer of the tax is by you only. That means sufferer of the tax and payer of the tax, same person. Whereas in the case of indirect taxes, it is not so, my dear. You being a practicing CA, render these services to a client who liable to pay the tax of GST? Supplier, namely auditor. But auditor going to pay from his pocket? Obviously not. Auditor is going to collect from the pocket of client. That means sufferer of the tax is the client. Payer of the tax, auditor. So, levy on auditor, but then imposed on client. So, impact of tax and incidence of the tax on two different heads is known as indirect taxes. Further, how my indirect taxes different from direct taxes? If you refer here, direct taxes, income-based tax, is income-based tax only. So, how one should understand income-based tax is a direct tax? As you are aware of that, my dear, if income is there, on such net income only you pay income tax. Am I right? Are you going to pay tax on loss? No. That means income-based tax, income tax, which is direct tax. When you talk about our indirect taxes, is a transaction-based tax. Income is immaterial. How to understand this? Very simple. Sir, I am a buyer come seller of laptops. Assume a scenario. I am buying laptops, selling the laptops. I am a dealer in laptops. I purchase the laptops. Per laptop, let us say rupees 40,000. When I purchase 40,000. When I sold that laptop for rupees 50,000, I gained how much profit here? 10,000. Am I going to pay the tax on 10,000, or am I going to pay tax on 40,000, or I am going to pay the tax on 50,000? Is a point. Transaction of supply means sale. Taken place what value? Value rupees 50,000. So the tax levied on 50,000 is known as transaction-based tax, irrespective of the profit or loss. Even tomorrow, if I sold laptop worth rupees 40,000, I purchase only for rupees 30,000. I book the loss of 10,000. In spite of that, what is your transaction? 30,000. Pay the tax on that. Is known as indirect taxes. One should understand that how my indirect taxes different from our direct taxes. Is it clear, my dear sir? Further looking ahead. When you refer the income tax, namely direct tax, in the case of direct tax, rate of taxes different from person to person. For a corporate company, one rate. For individual, different rate. Both of them persons only under income tax. But tax rates are different from person to person. Whereas, in the case of indirect taxes, my dear, it is not so. In the indirect taxes, rate of taxes uniform. You may be a corporate giant or you may be ordinary person. As long as you involved in dealing with transactions of indirect taxes, rate of tax remains same. How to understand this? With simple example. Assume a scenario. Tata Consultancy Services, TCS, a big giant in software industry, am I right or not? Yes. Such corporate giant in software industry supply the services liable to pay GST. CGST 9%, SGST 9%, as a whole IGST 18%. A ordinary person. Individual who is associated under the GST supply the commercial training and coaching services to a beloved budding CS. also liable to pay same 18%. There is no difference between person to person with regard to rate of taxes are considered under the indirect taxes. So my indirect taxes, name itself indirect from direct. So one should understand indirect taxes before starting the subject as an introduction to indirect taxes. Let us further, my dear friends, referring to here, entire revenue of direct taxes goes to Government of India. Central Government of India only will collect the entire revenue of income tax. There is no sharing with the states. Whereas indirect taxes not like that. Indirect taxes, the basic verbatim of indirect taxes, foundation stones of indirect taxes, basically sharing the taxes with states by central. If you refer the CGST, central government revenue, SGST, state government revenue, UTGST, state government revenue. How somebody used to argue with me, sir, IGST, integrated goods and services tax, which is levied on interstate supply, which is revenue of the Government of India. Absolutely not, my dear. Understand. IGST, name only IGST, integrated goods and services, will be levied and collected by the Government of India. It does not mean that is a revenue of the Government of India. Again, that IGST should be apportioned between central and states with the help of Central Clearing Agency, CCA, which is robot mechanism of GST network portal. I will explain to you that by illustrating with the numeric examples. For the time you understand, indirect taxes revenues are those taxes, those revenues which are shared between central and states. Got the clarity, my dear? Customs Act. Agree. Accept it, because the act was enacted by the Government of India. That Customs Act, duty on imported goods, duty on exported goods will be collected by the Government of India. It is the constitutional amendment, constitutional levy. Is clear as by virtue of Finance Act, by virtue of the Customs Act 1962. That alone Government of India revenue. Otherwise, remaining all sharing between central and states. Further, my dear friends, in the case of direct taxes, you used to come across previous year, assessed in the assessment year, previous year and assessment year concept. Careful. Under indirect taxes, such a previous year, assessment year concept not at all exists. In the indirect taxes, there is no assessment year. There is assessment. Assessment does not mean that assessment year. Assessment is different from assessment year. Previous year assessment year you very often come across in the income tax, which is not at all there under the indirect taxes. Then one can question me, sir, what do you mean by previous year? What you name the previous year? We name the previous year is as preceding financial year. Repeat, I say. Preceding financial year. Whereas assessment year we naming here under indirect taxes as financial year. Assessment year named as financial year. Previous year named as preceding financial year. Got the clarity? Further, my dear friends, when we talk about income tax, which is progressive nature, whereas indirect taxes regressive nature. What do you mean by progressive nature, regressive nature? Technically you are speaking, sir. We want to know. I am going to present here progressive nature, which belongs to direct taxes. Regressive nature of taxation, which belongs to indirect taxes. Now I am going to present in front of you with the help of numeric example. Is clear, my dear friends? So, my dear sir, presenting here now what do you mean by progressive nature, which belongs to direct taxes? How it is progressive nature, direct taxes? Very simple, my dear. Listen here. Assume here Mr. C, who is, let us say, a practicing CA. His income, year 1, year 2, year 3. Let us have Mr. C, a practicing CA, his income. So net income I am talking about here, net income. Let us say here 1 lakh. Here 2 lakhs. Here let us say 3 lakhs. Assume a scenario, Government of India increases the rate of tax. So I will say that here rate of tax, say let us say for example 10% in this year 20%, in this year 30%, resulting that revenue to the government, revenue to government, here rupees 10,000, here rupees 40,000, here 90,000. So here what happened, my dear? The rate of taxes goes up and up, revenue also goes up and up, is known as progressive nature. It is known as progressive nature. Got the clarity, my dear friends? Mr. C being a CA, whose income first year 1 lakh, second year 2 lakhs, third year 3 lakhs. Assume Government of India increases the rate of taxes, tax also goes up. Income goes up, tax also goes up. It is one way of presentation in a simplified manner. Even my dear, if the income is not gone up, rate of tax goes up, which also be resulting more revenue. In the case of direct taxes. You get my point, sir? Same point I am presenting again for a kind consideration here with another example here as follows. Look here, my dear sir. Let us say a businessman, let us say Mr. B, whose income in the first year, let us say 10 lakhs. Second year also let us say 10 lakhs. Third year also let us say 10 lakhs. Assume a scenario. If that is the case, the rate of tax, I will say here net income, and the rate of tax, my dear, in the given case, rate of income tax, let us say 10%, 20%, 30%. Income is remains same in fact. Since the rate of tax goes up and up, what happened here? Revenue to government. Here rupees 10,000. Here rupees 20,000. Here rupees 30,000. You getting my point, sir? Here rupees 30,000. So what happened here? Rate of tax, in fact, remains, the income remains same. Since the rate of tax goes up and up, revenue to the government also goes up and up. Is known as progressive nature, which is come under direct taxes. So this is what I am trying to say here is, it is called as progressive nature. You got the clarity, my dear? The earlier one also progressive nature. Here you see, income also gone up, rate of tax also gone up, revenue increases. Second case, income is remains same, rate of tax only gone up. Since the rate of tax goes up and up, revenue also goes up and up, is known as progressive nature. In the case of direct taxes, is a progressive nature. Got the clarity, my dear sir? Is a progressive nature. In a simplified manner to say. Further, now I am bringing to a notice what do you mean by regressive nature, which is from indirect taxes. Let us have a discussion on that. Sir, in the case of regressive nature, rate of tax goes up and up, the revenue to government also reduces, not increases, reduces. Is called what? Regression. How it takes place, I will tell you. Assume a scenario here. For example, Mr. Let us say here, Mr. A, who is a trader, selling the goods. So, he sells the goods. My dear friends, let us say he sells namely laptops. Now, in the first year, he sold the laptops, let us say, per laptop at rupees 40,000. That time, rate of tax to the government, let us say here 10%. Assume a scenario. What is the income to the government? On sale, 40,000, 10%. How much comes here, my dear? 4,000 rupees. So, revenue to department, namely government, also I can say that 4,000. Second year, what happened? Listen here, second year what happened? The sale price of this particular product increases because of corona and all, everyone is finding for laptops. Therefore, let us say it is increases to 50,000. Here price increases, sir? Yes. Now, in the given case, what happened, no, sir? When the price increases 50,000 per laptop, the rate of tax here, assume a scenario, also be increases. Let us say here rate of tax increases 20%. What happened, no, my dear sir? I will tell you here the important lacuna. When the price increases to 50,000, which also be resulting inclusive of the tax, that particular 50,000 hike in the price is not only the profit margin of the supplier but also tax portion. Resulting that what happened, the buyer affording that product will be reduces. Get me? This is a lacuna. This is an economical situation. Suppose if I say my fees is 11,800, affordability for few people. If I say my fees is rupees 40,000, maybe one, maybe zero, to afford that. So the price goes up and up. What happened? Indirect taxes, demand for the product decreases. That causes lower selling price. Therefore, I am not able to get the market rupees for 50,000. I just every day open the shop, sitting, idly eating food and closing at the end of the day. So, customer is not coming to my shop because of the price. Now what I did is, because of the rate increases, so price increases. Therefore, I try to reduce my price to boost my sales. So, my profit margin, I kept very thin, resulting that what happened, in the given case, I am, instead of selling rupees at 50,000, I sell at rupees, let us say, here, even for rupees, because of my sales to boost, I am selling at rupees, even not for 20,000 rupees, it is for 10,000 rupees only to meet the competition. So, what happened here? When I sold rupees for 10,000, customers are coming, standing in the queue, getting pre-booking orders. Because I kept the price very, very less, bottom lever is almost all thin. No profit, very normal profit in fact. At rupees 10,000 we are selling to sell, people are coming, demand increases. When the price reduces, demand increases is the concept, is the lacuna behind this. Resulting that what happened, government revenue on rupees 10,000, 20%, how much comes? 2,000. So, this is what the regressive nature in the case of indirect taxes when you increase the taxes. It is a regressive nature taxation. Got the clarity, my dear sir? When you talk about indirect taxes, rate of tax goes up and up, its income reduces to government less and less. Income to government less and less. It is a general approach in the industry. One cannot deny. Somebody will argue, sir, there may be, though price increases, demand also may increase. Is exceptional. Price increases, demand also increases, is exceptional. In the given case, what happened? In general, price increases, demand decreases. One cannot deny the exceptions. Barring that exceptions, this is what the provision. So, indirect taxes, regressive nature, wherein rate of taxes increases up and up, revenue to department decreases. Got the clarity, my dear friends? Any difficulty? Now please come back to our regular study. Where we are? We are here, Amma. So, previous year income, assessed in the assessment year in the case of direct taxes. In the case of indirect taxes, we won't have previous year and assessment year. Further we referred, direct taxes is a progressive nature, whereas indirect taxes is regressive nature. This is what I explained to you just now. Regressive nature. Got the clarity? Further, my dear sir, when we talk about direct taxes administered by the direct tax department, which is supervised by the CBDT, Central Board of Direct Taxes. You are aware of that. Whereas indirect taxes is supervised by CBIC, Central Board of Indirect Taxes and Customs. CBIC is the main organ under the indirect taxes. It is supervising GST, followed by customs also, but not FTP. Foreign trade policy is supervised by DGFT, Director General of Foreign Trade. Barring that, GST provisions, GST legislations, followed by customs legislation, supervised by the CBIC, Central Board of Indirect Taxes and Customs. Got the clarity, my dear friends? Any difficulty in the given case, my dear? So, if anybody asks me, hey mister, tell me what is your indirect taxes? I will simply say that my indirect taxes are as follows. From the beginning I will say, in the case of indirect taxes, impact of tax and incidence of the tax on different persons. Indirect taxes, where it is a transaction-based tax, supply-based tax. Indirect taxes, rate of taxes is uniform, not going to differ from person to person. Indirect taxes, where the revenue has been shared by the central along with the states as well as union territories. Further, indirect taxes in which there is no previous year and assessment year concept. In the case of indirect taxes are regressive nature. Indirect taxes supervised by CBIC. CBIC means Central Board of Indirect Taxes and Customs. Got the clarity? Once you understand what you mean by indirect taxes, then I can able to concentrate on indirect taxes is legislations. How, my dear sir? We have GST, we have customs, we have foreign trade policy. Especially if you refer the CA final syllabus, which has been given more weightage to GST. 75 marks for GST, 25 marks for customs and FTP. And moreover, question number 1 is very important, compulsory question, which is multiple choice questions. Now the CA should very clearly said that multiple choice means not like a kaun banega crorepati A, B, C, D to select. It is not like that. It is case study oriented multiple choice questions. You got the clarity? Case study oriented multiple choice questions means you should be thorough with the subject, then only able to answer. Practically, there will be a big 1 or 2 paras to read the entire content, identify the requirement, and go and look multiple choice question which is right to answer. I am going to be practicing the class those all type of case study oriented multiple choice questions, which is almost all 30 marks in the examination out of 100 marks. Is it clear, my dears? So now let us start first. For my discussion, I will take up the GST legislations followed by customs and FTP. So starting with the GST, we will wind up our journey on indirect taxes with foreign trade policy. Is it clear, my dear sir? Let us start with GST. The moment you say GST, goods and services tax, one should know what you mean by appointed day. Under the GST, appointed day is 1st July 2017. From that date onwards, levy of tax has been introduced in India by removing the old regime of indirect taxes. Central excise, the CST, VAT, octroi, entry tax, luxury tax, that tax, this tax has been eliminated. Only one tax to bring truly one nation, one tax concept. Having that, Government of India introduced goods and services tax all over India. Dear friends, at present we have 28 states and 8 union territories. Today's scenario, with the latest updations I am telling you, I will explain to you. All over India, 28 states as well as 8 union territories, we have today our goods and services tax. Now, when you refer to Customs Act enacted 1962, but implemented with effect from 1st February 1963. You get my point, sir? What I am saying? Here, 1st February 1963 onwards, the Customs Act has been introduced in India to levy. But the act was enacted in the year 1962. Fine. Now, we are going to go with GST provisions. Let us concentrate with a cool mind GST provisions. Right from basics to advanced concept we are going to go with now. Sir, first and foremost, any levy of taxation, one should have to have source of taxes. Under the indirect taxes, I refer because I am referring indirect taxes. Source of indirect taxes. Same is also hold good in the case of direct taxes. Whichever tax you take Companies Act 2013. Any tax to levy, there must be source of tax. So, under the indirect taxes, my dear sir, before starting with the GST, we should know what source we have. First and foremost, one should understand that to levy the tax in India, government should enact an act, either in the parliament or in the state assembly, as the case may be. Without enacting an act, tax cannot be levied in India, is a fundamental constitution of India concept. Resulting that, my dear, Government of India taken the initiation to bring GST legislation, where constitutional amendment was required. Why constitutional amendment required for GST amendment? I will tell you. GST concept is dual taxation. What do you mean this? Dual taxation means central government as well as state government or UT will concurrently levy the taxation. Repeating, GST legislation concept is known as dual tax. What do you mean by dual tax? Dual tax means two taxes. One central government levy, followed by state government also levy on same transaction, is called dual taxation. To levy such taxation in India, constitutional amendment was required. That time when it was enacted in the year 2017, prior to 2016, Constitution has been amended. Concurrent levy. As per the Constitution of India, we have list 1, central levies. List 2, state levies. List 3, concurrent levy, which was not enacted that time, not operated. To bring that list 3 into force, Government of India made a constitutional amendment. After making the constitutional amendment, Government of India and state government got power to levy tax, namely dual taxation, CGST and SGST. If not, UTGST is the structure for GST. Therefore, Government of India first and foremost enacted the Act. Act was enacted. Got the clarity? Further, Act is not sufficient, my dear. Act also required to be follow rules. Rules are important. What do you mean by rules? Procedural aspects. Now there are so many amendments also in fact in the rules. Simply if you say, Mr. Trader, you pay GST. How will you pay GST? There must be a registration. How will you go for registration? There must be a procedure for registration. Where this has been explained means under rules. Rules provides detailed explanation, procedural nature. Is it clear, my dear sir? So, there must be an act by the parliament or state assembly. Of course, that should be give the assent by the President of India. The bill passed by the parliament should assent by the President of India to become an act. Likewise, state government also, state legislations passing the bills, it also should get assent from the state governor to become an act, followed by rules, procedural nature. While implementation of these rules, what happened? there may be effective date required. E-invoice. Now what happened? No, e-invoice mandatory. For whom mandatory e-invoice? There must be a threshold limit. Government of India said 500 crores above turnover. If we have e-invoice today mandatory, electronic invoice, it should be notified. New updations that can be notified by virtue of notification. Who will issue notification? Government of India for CGST, state governments for SGST, UTGST for which? Union territories. That means to say that, be careful, fundamental aspect, my dear. Simply Government of India issue the notification, that is not going to be worthwhile, namely workout. Reason, corresponding notification also should issue by state governments. Understand? Because our GST structure is what? Dual taxation. Under the dual taxation, there must be two notifications. Central, state or UT, as the case may be. What for notifications? To bring new provisions to implement with effective date. Which effective date onwards this particular provision is going to implement is called notification. Notification is not required to get any assent from President of India. Got the clarity? Now, once the notifications has been issued, while implementing that provision, there may be practical difficulties. Well possible. Yes or no? Even you take e-invoice, which is now newly introduced. Many of them do not know what you mean by e-invoice also, because it's the latest provision few days before only introduced. Now, what do you mean by e-invoice? For whom it is applicable? For whom it is not applicable? Need clarification. That time, Central Board of Indirect Taxes and Customs will come into picture to give clarification with regard to implementation of the provisions. So, who will issue the circulars? CBIC. CBIC issue circulars. Notification issued by government. Further, my dear sir, we have under the Indirect Tax also Finance Act. What is Finance Act? Is nothing but every year Government of India submitting the budget in the Parliament or state governments in the respective state assemblies with some amended provisions. Customs Act. Customs Act, now what happened? Let us say, for example, rate of basic custom duty should be increased from, let us say, 10% to 12%. That is amendment brought from the Finance Act. You get my point, sir? So the amended provisions coming from the Finance Act, appending with the Act, to implement that provisions, notification issued by the government. While implementing notifications, need clarifications. Circular issued by CBIC for these particular clarifications. Central Board of Indirect Tax and Customs clarifies the ambiguities which arose due to implementation of Act, rules, Finance Act, notifications. Is it clear, sir? So CBIC playing a vital role, my dear, in the indirect taxes. Now what happened? Under the GST provisions considered, we used to follow GST Council recommendations. GST Council, whenever from time to time recommends what to do, what not to do, should be followed by the CBIC by giving clarifications thereon. Got the clarity, sir? For the Customs Law is considered Finance Act. Customs Law is considered, GST Council has nothing to do with that. GST Council is different, not going to talk about customs. Finance Act will talk about the customs provisions amendments. Got the clarity, my dear sir? So, very simple, my dear. What do you mean by appointed day? If anybody asks you, the day on which GST has been introduced in India to levy the tax, which is 1st July 2017. What do you mean by source of taxation in the GST law, or in the customs law, or in the indirect tax as a whole? GST or customs, indirect taxes, source 1, Act 2, rules 3, notifications 4, circulars 5, Finance Act. Apart from this, one important source behind this, is known as judiciary. So one cannot be denied the importance of judiciary. Though it may be last but not the least, judiciary pronouncements utmost warranted under the indirect taxes. Reason, when there is a conflict between department and assessee, the solution from judiciary by way of judgment for the want of justice. So, source of indirect taxes totally 6. 1, Act 2, rules 3, notifications 4, circulars 5, Finance Act, and the 6th, judiciary. Case laws, very warranted, very much. I am also going to explain wherever required, relevant provisions, relevant case studies. Got the clarity, all of you? Now, further, my dear friends, looking ahead for your kind consideration, introduction to GST provisions, my dear. Introduction to GST. Fundamentals of GST. Got clarity, sir? So, we refer so far the difference between direct and indirect taxes, thereafter appointed day, thereafter source of indirect taxes. Now, GST legislations, where first and foremost I am presenting here for your kind consideration the fundamentals of GST. Introduction to GST. As I just now told you, to levy the tax in India, there must be an act for which list 3, concurrent list, has been enacted by the government with the help of the state governments. Here we have the constitutional amendment to bring the GST legislation. 122nd Amendment Bill 2014 received the assent of the President of India on 8th September 2016. On this date, the bill became act, but not implemented. GST bills became act on 8th September 2016. The amendment in the Constitution, 122nd Amendment Bill, received the assent of the President of India on 8th September 2016. Followed by further here 101st Amendment taken place in the Constitution, which paved the way to introduce the GST law in India. Bill is 122nd Amendment Bill 2014. That has been got assent of the President of India on 8th September 2016. Further, that particular, after became an act, further there is an amendment on 101st Amendment in the year 2016 in the Constitution of India to bring or to lay down the provisions in India. Are you getting my point, sir? Bill was introduced 2014. It became an act on 2016 by virtue of 101st Amendment Act. Is clear? Amendment in the Constitution. Having this, my dear, what this particular 101st Amendment brought into force is to levy the GST on all supply of goods or on all supply of services or on both. Are you getting my point, sir? So here, presenting here, my dear sir, this area, if you refer, you come across here in this particular place. Article 246 capital A of the Constitution of India given the power to the Government of India to levy tax on all supply of goods or on all supply of services or on both. Sir, 122nd Amendment in the Parliament to bring the bill 2014 became an act 2016 on 8th September. 101st Amendment in the Constitution of India given the power to lay down the GST provisions in India. Having that power, Government of India enacted further Article 246 capital A to get the power by the central as well as state to levy concurrent levy. While enacting Article 246A, Government of India very clearly noticed and kept outside the purview of the GST alcoholic liquor meant for human consumption. In short, intoxicating. Article 366, sub-article 12, capital A of the GST of the Constitution of India very clearly says that GST cannot be levied on supply of alcoholic liquor for human consumption, which means what? It is non-taxable supply. Government of India tomorrow decided to levy the GST on liquor, not possible. If Government of India want to levy the GST on liquor meant for human consumption, there must be a constitutional amendment should take place. Unless there is a constitutional amendment, levy of GST on sale of liquor meant for human consumption, not possible. That's why Article 246 capital A of the Constitution of India given the power to the government, central and state, to levy the tax on supply of goods or services or both, keeping separately a provision in the Article 366, sub-article 12A of the Constitution of India, which says that we are not going to levy the GST on sale of liquor. So, what is going to levy on supply of liquor meant for human consumption? The old regime of VAT, value added tax, which is continued to levy on sale of liquor. And moreover, for kind consideration, my dear, as per the list 2 of the state list of the Constitution of India, given the power to collect the tax on such sale of liquor by state governments. So, it is a purest form of revenue of the state governments. Sale of liquor meant for human consumption, tax is levied what? Value added tax. And is the revenue of whom? State governments. Got the clarity, my dear sir? So further. Now listen here. GST yet to levy products for which nil rate also not mentioned. There are 5 products. One is called petroleum product, namely petroleum crude. Second one is the high speed diesel oil. Third one is motor spirit known as petrol. Fourth one, natural gas. Absolutely not cooking gas. And fifth one is aviation turbine fuel. 5 products. As per section 9, subsection 2 of the CGST Act 2017, which specifically stated that these goods under GST law, but GST yet to be fixed for them. That means Government of India tomorrow, upon the recommendation of the GST Council, if the GST Council says that, hey Mr. Government and state governments, you please go ahead to levy the tax on these products, means yes, possible to levy by issue of just a notification. Whereas non-taxable goods, here I mentioned, my dear, these non-taxable goods are those goods which cannot be levied the tax just by notification, unless constitutional amendment takes place. There is exact difference between non-taxable goods, the goods for which yet to levy the tax. Is clear, sir? So having this concept, my dear, referring further for a kind consideration, important points under the fundamental aspects of GST. Important points one should understand and note. These points need more explanation with the illustrative manner. I am going to present in front of you for a kind consideration. First and foremost, just now I referred, my dear, concurrent powers on Parliament and state legislatures to make laws governing goods and services, namely GST. What type of levy? Concurrent levy means dual tax. Central and state simultaneously going to levy the tax on one transaction. How to understand this? I am going to bring to your notice with a simplified example. Is as follows. Now look here. My dear sir, presenting in front of you, let us say, Mr. C of Chennai. Mr. C belongs to Chennai. Means Tamil Nadu. Am I right, sir? He supplies the goods, taxable goods. What value? Let us say for 1 lakh. To whom? Let us say to Mr. H. H of what? Let us say H of Hyderabad. He belongs to Hyderabad, Telangana. Now, is a supply intrastate or interstate? Interstate, yes. If it is interstate, my dear, interstate supply. If so, IGST, integrated goods and service tax, will attract, or CGST and SGST will attract? A question mark. All interstate transactions will attract IGST. If it is IGST going to levy here, let us say 18%, for example, IGST, the IGST comes rupees 18,000. Is it clear, my dear sir? Now be careful here. I am presenting here 2 important issues here. It is one transaction at interstate level. Fine. At the same time, if the transaction took place within the state, intrastate, it is CGST and SGST. Is clear? If there is a case, that is also I am presenting here. Look, assume a scenario that H of Hyderabad, Mr. H of Hyderabad sold those goods to, let us say, S of same Hyderabad. So, in that case, he sold for rupees 1,50,000. If so, liable to pay CGST and SGST 9% each. Am I right, sir? If so, how much comes? 9% CGST and 1,50,000. How much comes, sir? 9% on 1,50,000. Very simple, sir. 13,500. So 13,500 and 13,500. Is clear? Now, I am not going to ask any questions here because it's a simplified manner you came to answer without my presentation also. It is, as you rightly said to me, it is intrastate supply. Correct, sir? Intrastate supply. Now here, my point here is, if you look in the earlier example, here, you notice that, sir, it is intrastate supply, liable to pay IGST. Here, it is intrastate supply, liable to pay CGST and SGST. Good. My doubt here is this. Here sale of goods. Here also sale of goods. At this on the screen, interstate supply, sale of goods. If so, why should not be CGST, SGST? My point, why should be IGST? Here, it is sale of goods. You said CGST because intrastate supply. Agree, intrastate within the state. Hyderabad, seller, buyer also Hyderabad, no problem. Intrastate said, you said CGST, I to agree. Sale of goods. Same way, here also sale of goods only. Maybe seller is in Tamil Nadu, buyer is in the Telangana. That is only different. Why not CGST, SGST? Why should be IGST? One should understand fundamental concept. My dear sir, in the given case of intrastate sale, seller from Telangana state, buyer also Telangana state, resulting that state government empowered to levy SGST, correspondingly same amount of CGST by central. Because a transaction took place within the boundaries of a state, within the territory of a state. Within the territory of a state, transaction took place. Therefore, state government empowered to levy tax. Is it clear? Therefore, CGST followed by SGST. Or SGST followed by CGST. Is clear? Whereas, in this case what happened? A transaction not within the territory of a state. A transaction beyond the territory of a state. That means seller in Telangana, Tamil Nadu, buyer in Telangana. So a transaction between two states, one state cannot enact the act to levy the tax. A transaction took place in two different states. One state has no power to levy tax in other state. A transaction of two states. That is the reason SGST cannot be levied by the state. That is the reason CGST also cannot be come into picture. As a whole, CGST, SGST won't come into picture. If a transaction took place as a sale, where there is no CGST, SGST apply, in that case, IGST will be levied by central government of India. Got the clarity? But absolutely it is not the revenue of the government of India. IGST for the level playing field purpose only, government of India coming forward to levy IGST. Otherwise, IGST has no role to play. Because of one state cannot levy the tax on that transaction which took place at interstate level. That is the reason IGST levied. Now got the clarity? The meaning behind the IGST, one should know, you being a financial professionals, demonstrate the subject. Is clear, my dear sir? Further, my dear. Just I am talking about fundamental aspects, nothing else, important points. There I am presenting here. So first point is clear. This point is clear, my dear. Concurrent powers on Parliament and state legislatures to make laws governing goods and services. Further, important point number 2. This is very important to note for your kind consideration, my dear sir. Point number 2. Explanation to Article 269 Capital A of the Constitution of India provides that the import of goods or services will be deemed as a supply of goods or services or both in the course of interstate supply, interstate trade or commerce. Especially in case of import of goods, IGST will be levied along with the basic custom duty, namely custom duties of Customs Act. Sir, here one should understand. A transaction of import or export of goods under the GST law, as per the Constitution, we treat it as interstate supply. That means import of goods, export of goods. In general, deals by the government, state, the particular custom department. Customs Act 1962, where the Department of Customs, Government of India will levy the tax, namely duty, on import-export of goods. Such import or export of goods under the GST law, we will treat as dash, interstate supply. If that is the case, especially they said here, in case of import here, import of goods, IGST will be levied. IGST will be levied. Why should be IGST will be levied? Who will levy this IGST? Department of Customs. IGST levied by Department of Customs along with the basic custom duty. Resulting that, what happened? Earlier, we had under the customs law, namely called as CVD, namely called as special CVD. These particular taxes has been subsumed and named as IGST under the Department of Customs. Sir, understandably not understand, sir. Don't worry, my dear sir. I will explain to you first this part, my dear. CVD, countervailing duty. What do you mean by countervailing duty? One should know something about it. Sir, countervailing duty under the customs law, we call it as equal to central excise duty. It is called as central excise duty. Sir, why central excise duty should be levied by Department of Customs on account of import of goods? One should get doubt on that. I will explain. Dear friends, I will put in a simplified live example for your kind consideration. Let us have a discussion like this. Dear friends, earlier I am talking about 7, 8 years before. I used to go to Cochin, Kerala, for taking classes, for CA final especially. One fine day what happened, I went to Vyapari Bhavan in Cochin, along with my coordinator. For buying, before completion of my classes, I used to buy something for giving as a gift to my wife and all. Wife and my children's. I went to buy a particular cell phone. I went to a particular showroom, Nokia showroom on those days. Very big brand it was. I found a very good, cute cell phone worth rupees 10,000, 9,999 rupees. Very costly for me on those days. I could not able to purchase because that was not allowed to bargain. I came out from the shop. The moment I came out from the shop, in front of the shop, small shop, having the same similar cell phone, only the name Nokia not there. I asked that shopkeeper how much it is. He said 2,999. So much of variation. Then I tried to bargain. I came from Chennai for taking classes to your state. Could you reduce for me, my dear brother? He said, yes, why not? You are a professor. For you, 2,500 final price, sir. So I'm very happy. I paid and I purchased that particular product. And he said, sir, throughout the night, you charge this battery. Long life will come for you. Then I feel happy. I purchased that to give as a gift to my wife. I charged my particular hotel. Next day morning I saw my cell phone is working, charger not working. Okay, charger only gone, no problem, we can purchase. After completion of my classes, I catch the train. That time train only, my dear. About to reach to Chennai, early morning, around 4 o'clock, 4 a.m. Ringtone is coming, display not there. Holding the line, I am calling, who is this, who is? On the other line, my wife. She's got so angry. Going out of station, coming, while coming, who is this on the line? No, display not coming. She's not accepted. I went to home, I asked her to call. A ringtone also not coming. A couple of 1 or 2 days itself, the phone is fully got damaged. Not functioning properly. What I can do? No warranty. One fine day, my daughter holding that cell phone and throwing. Dad, catch. I thought ball she may be throwing. Holding the cell phone. I said, throw, no catch. That time I decided not to buy the China product. It is made in China. Such a nasty product. Valuable my savings I paid for nothing. Sir, is an imported product, my dear. If a product imported by Indians in India at a cheaper price and throwing in the market like a dumping manner at a cheaper cost, then who will buy our Indian made product, tell me? Made in India, so durable, so worthy, maybe a little bit costly because of the overheads in India, which I am unable to afford. And as a common man, I affectionate to buy the lower price, nasty product. Everyone buys such a imported products, nasty products, no worthy products. Indian made product, Indian manufacturer, Indian industry, not in danger or not? If so, it is not the responsibility of the government of India to protect the Indian industry in India. That is the reason government of India said, hey Mr. Importers, if you import the product from outside India, in addition to the basic custom duty, you have to pay additional custom duty, which is known as, on those days, called as excise duty. Got the clarity? At the same time, that imported product, you are going to be selling in India or not? If you sell in India, sales tax will attach or not? That sale tax, that time, under the customs law called as special countervailing duty, known as value added tax, VAT. Now the VAT and excise duty has been removed or subsumed and named as GST. Got the clarity? That is the reason the government of India today is levying IGST in replacement of CVD and special CVD to protect the interest of the Indian manufacturers in India especially. Got the clarity, my dear? So, from this what we understand here is, one should aware of this provision. Import or export of goods should be treated as interstate supply. Since interstate supply, state cannot levy the tax. Therefore, IGST will be levied by the government of India. This IGST is in replacement of excise and VAT, which is in addition to customs duty. Got the clarity, my dear? Further referring to you here, point number 3, important provisions. IGST will be apportioned between central and states in the manner provided by Parliament by law as per the recommendation of the GST Council. Just now I said, no, my dear, IGST is a revenue of state as well as central. It cannot be revenue of the government of India alone. How to understand this? We want to have illustration on this. IGST, how can we able to apportion between central and state? What recommendation given by the GST Council? This point I am highlighting now in front of you with illustrative example is as follows. Now listen, sir. Now explaining to you how the IGST apportioned between state and central is the explanation I am presenting here. Now listen, sir. Let us say Mr. C of Chennai from Tamil Nadu sold the goods to, let us say, Mr. H of Hyderabad, means Telangana. Two different states, my dear. Is it clear? Now, what value of the goods has been sold? Let us say he sold for rupees. For easy computation purpose, 1 lakh. Liable to pay CGST, GST or IGST? Quickly, fast. IGST, let us say 18% IGST, which is 18,000 rupees. Is it clear? Which is IGST. So, who collected? Levy and collected by whom? Central government. So, I will say that here, this levy and collection by central government of India. Correct, sir? Central government. Up to this, no doubt. Am I right or not? I never said revenue to central government. Be careful. This transaction took place here. Fine. Further, what happened, my dear sir? After this transaction took place, what happened here? Mr. H of Hyderabad, let us say, sold these goods to somebody else, to let us say Mr. S. Mr. S also be located in Hyderabad, in the same state of Telangana. Now what happened, my dear, here? He sold for rupees, let us say for example, he sold for what rupees? I will mention here value. As I told you, 1,50,000. Sold for 1,50,000. Liable to pay dash. Intrastate is interstate. Intrastate. Therefore, liable to pay SGST and CGST. SGST 9%, CGST 9%, which is, as you are aware of that, 13,500, 13,500. Is it clear, sir? One should understand this point in a simplified manner, my dear sir. Sir, Mr. C of Chennai, supplier of the goods, he is collecting IGST from H of Hyderabad, and that IGST should pay to department or not? So department he paid, to central tax department he paid, IGST collected and paid to central government. Now this 18,000 rupees is in whose pocket? Central government or state government pocket? Central government pocket. How much? 18,000. Is it clearer, brothers? Now, who suffered this 18,000? H of Hyderabad on his inward supply. When he supply further outward supply, he is liable to pay CGST, SGST. While paying CGST, SGST, what Mr. H of Hyderabad says, I already suffered on my inward supply of rupees 18,000. I want to take as a input tax credit. Is allowed under GST or not? Well allowed. Input tax credit, one of the backbone for the GST law. Therefore, government said, yes, you go ahead, please claim the credit. So, H says that, H of Hyderabad says that, I will say the H of Hyderabad says that, I am liable to pay CGST, SGST. How much liable to pay? Output tax. Output tax liable to pay 13,000, 13,500. Yes, 13,500 again. Is clear, my dear sir? If so, he says that I want to claim input tax credit of dash, input tax credit of IGST. Claim it. While claiming, he has how much credit with him? 18,000 rupees credit. Wanted to set off this credit against CGST or SGST, a question mark. This is also important to note. We have amendment here. Section 49 capital A of the CGST talks about this. So don't worry at all. I will explain to you here the setting of this provision with the latest provision, what is available now in the industry, applicable for the exam. Sir, if I am not having IGST liability, I have only CGST and SGST liability. If so, what is my credit? I have IGST credit. First you take IGST credit to set off your CGST, SGST liability as you like manner, as you decide proportion. Repeating, IGST credit undoubtedly should first set off against IGST only. But here no IGST, no. IGST output tax liability not there. Only input tax credit is there. Output tax liability CGST, SGST is there. If the CGST, SGST is there, liability to pay off, your credit to set off first IGST credit only priority. Even though I have CGST, SGST credit, I should not touch. I should touch only IGST credit. Don't worry, this point Again I will refer to you in due course, and separate chapter we have payment of tax. There I will refer this. So for the time you understand, my dear, IGST credit, if you have first set of that to pay your liability. Here only I have CGST liability. CGST, SGST liability is there. No other liability, only IGST credit is there. This IGST credit I can set off as I like manner, as I decide proportion left to me at my tax planning. I can set off fully for CGST first. If not, first SGST fully. Thereafter, the other tax. Or equally also. As I like manner. In this case, I decide to go equally. No problem, go ahead. So in that case, 18,000 equally setting off. So 9,000 and 9,000. If I deduct net liability, net tax paid, how much? Here it comes rupees 4,500, 4,500. Is clear, brothers? Any difficulty here? This is what the important area one should understand. Important area one should understand. Sir, in the given case, what is the revenue to the state when H sold the goods to S? State government levied what amount of GST, my dear? State government levied what amount of GST, my dear? Here, they levied, SGST state government how much levied? 13,500 levied. So, state government expected H will pay to the state government 13,500, but he pays how much SGST? 4,500 only paid. Is a shortfall of revenue to state government or not? State government is asking, hey Mr. H, where is my balance amount, man? Rupees 9,000 rupees, where it gone? H says, sir, really I do not know, sir. What is the law permitted to claim IGST? That I claim IGST as a credit, and the balance amount I paid, sir. In fact, IGST I paid to Government of India, sir. Then the state government of Telangana asking, hey Government of India, where is my shortfall of rupees 9,000? Government of India said, look state government, don't worry at all. Your IGST of rupees 9,000 is in my pocket. Don't worry. We, as you are aware of that, we have GST network portal. Goods and Service Tax Network Portal, GSTN, where we already set up a robot mechanism to settle IGST collections between central and states, called as Central Clearing Agency. Speak out. Central Clearing Agency. CCA is a robot mechanism system of the GST portal that will take care to apportion the CGST and SGST from IGST. Is clear, sir? From IGST to apportion CGST, SGST, who will take care? CCA. So CCA says that Telangana state, you don't worry at all. I will debit to central government 9,000 rupees. And I will create your account. How much? 9,000 rupees. So here comes into picture, my dear sir. Central government says, the CCA says, hey central government, you got 18,000 rupees. Pay from that 9,000 rupees to state government. So state of Telangana, important to note, state of Telangana got the revenue how much earlier? SGST instead of 13,500 got how much? Only 4,500. So 4,500 received plus Central Clearing Agency CCA will credit to state of Telangana how much rupees? 9,000. Resulting that state government got how much? 13,500 is one of the revenue. Correct? At the same time, Central Government of India says, my CGST collection how much here? Only 4,500. So, here my dear sir, so Central Government also says that my CGST collection is rupees 4,500 received, plus now Central Clearing Agency is giving the credit to me from IGST. How much? 9,000. Totally it is 13,500. Are you getting my point, sir? 13,500. Now what happened? This IGST what was collected and retained by the central government, here this 18,000 rupees collected and retained, from this 18,000 rupees 9,000 gone to CCA, gone to state government through CCA. The balance 9,000 also goes to central government CGST account through CCA. Understand, sir? Thereby, this IGST will become 0. Are you getting my point, sir? Repeating again, don't worry. My dear sir, here if you refer carefully, my dear, in the given scenario, 18,000 rupees originally collected by the government, IGST collected. How much collected, my dear? 18,000 collected. Collected in the name of IGST. 18,000 collected. And subsequent sale taken place where H paid to department state SGST 4,500, CGST 4,500. So the state government got lesser revenue than that of 13,500. Therefore, CCA, Central Clearing Agency, comes into picture, debiting the IGST 9,000, debiting IGST 9,000 and crediting to state SGST 9,000. Thereby, totally got how much? 13,500 by state government. Their revenue, they got it. Is it clear, my dear? At the same time, CGST, central government, got only 4,500. Now received from IGST account, how much? 9,000 with the help of CCA. CCA credited to CCA account, SGST account, and CCA debited to central government account, IGST 9,000. So IGST became 0. SGST now total become 13,500. Now got the clarity, my dear friends? Any difficulty in the given case, my dear?
Only after selling goods only IGST will settle.
Good question you asked. IGST generally will be settled when the transaction completed. Means end user consume the product or services. When the chain link B2B transaction going on takes place, IGST will be in the hands of central government. When the transaction fully concluded, B2C, business to consumer, when the transaction ends, there the revenue generates. That time IGST will be settled. Is clear, sir? In general. Otherwise, IGST is in the hands of the central government. Upon the recommendation of GST Council, this particular IGST furthermore going to be apportioned between central and state. It is later on will decide. If the transaction not concluded, as long as B2B takes place, business to business, one fundamental foundation funda it is, revenue won't generate to government. When B2C, business to consumer takes place, revenue to the central state generates, either intrastate or interstate, as the case may be. Very good question you ask. Is it clear, my dear sir? Any difficulty up to this? So, you all got it now, my dear sir? Fine. Now referring to here, coming to this point, important points under GST, where I referred here just now to you for your kind consideration. Point number 3 is now covered. Point number 4. Principles of determination of place of supply is upon the recommendation of the Parliament. Parliament will recommend upon the recommendation of the GST Council. So, referring to here, principles for determining the place of supply. Place of supply is considered. Place of supply is considered, my dear sir, a very big topic in fact, from IGST level. When a supply takes place, especially in the course of interstate trade or commerce, the place of supply in general will be upon the recommendation of GST Council, Government of India will decide. It is not a state purview. A transaction at interstate level, whose place of supply is upon the recommendation of the GST Council, Parliament will decide. Is it clear, my dear sir? These are all the important points we referred here so far, my dear sir. All 4 points. Now you are quickly able to gather these 4 points. First point what? First point, concurrent levy means dual taxation. CGST, SGST. CGST or UTGST. CGST, SGST, as the case may be. Or IGST. Is it clear? Second, all import or export will be called as interstate supply. Third one, IGST. IGST is apportioned between central and state. Just to explain to you with the help of numeric example. Further, the transaction at the interstate level, whose place of supply is purview of the Parliament. Is it clear, my dear sir? These are all important basic foundation fundamental stones of the GST law. Is it clear, my dear sir? Any difficulty, my dear sir? Under the fundamentals of GST, very, very important foundation stone it is I am bringing to your notice. Listen here. You know IGST. Who will levy IGST? Central government. In the case where transaction at interstate level. Is clear? Perfect. Very good. In the case of intrastate, CGST and SGST. Good. Now, here we have UTGST. One should not deny this. Here amendments also taken by recent past. What happened now, my dear? Earlier we had 9 union territories in fact. 9 union territories. But what happened in the recent past? This particular Dadra and Nagar Haveli, one union territory, followed by Daman and Diu. These two separate union territories earlier. Now Government of India, for the easy administration purpose, merged these 2 UTs into one UT. Now named as Dadar, Nagar Haveli and Daman and Diu is called as one union territory. When UTGST will apply? A question mark. And who enacted this act? Sir, IGST enacted by whom? You tell me. IGST enacted by central government. SGST enacted by state governments. Excellent, my dear. UTGST enacted by whom? Central government of India. Why, sir? Why not the respect to state governments? Sir, UTGST Act enacted by the Government of India because the UT for which no state assembly. There are the following 5 states which has no state legislature. We have Tamil Nadu State Assembly, Andhra Pradesh State Assembly, Kerala State Assembly, Karnataka State Assembly, Maharashtra State Assembly, we have. But even you talk about union territories, New Delhi, namely Delhi, we have State Assembly. Our Pondicherry, we have State Assembly. Wherever State Assembly is there SGST apply for intrastate supply along with CGST. In the case of union territory, such union territory not possessed state legislature, for that state, namely for that union territory, Government of India enacted the UTGST Act by passing the bill in the Parliament, got the assent from the President of India. There are 5 states like that. One is called as Andaman Nicobar Island, 2 Chandigarh, 3 Dadar and Nagar Haveli, followed by Daman and Diu. 4th one is Ladakh. 5th one Lakshadweep. These 5 union territories, UTGST Act enacted by the Government of India. However, Delhi union territory, where State Assembly is there, they have been passed State SGST Act. Pondicherry, called Puducherry, though maybe union territory, which has its State Assembly, Puducherry, Pondicherry also be passed the State SGST Act, resulting that Delhi and Pondicherry SGST applies, though it may be union territories. Is it clear, my dear sir? This point I would like to illustrate with the help of numeric example. Is as follows. Now look here, sir. Assume a scenario. Example 1, let us start with. Example 1. My dear sir, now let us say Mr. P of, let's say I will say the Pondicherry, Puducherry, Mr. P of Pondi, namely Puducherry, supply the goods, namely sold goods to Mr. C of Chennai. Is clear, sir? Is it intrastate or interstate? Interstate. It is interstate. It is interstate. So liable to pay IGST. Now, same way here, if let us say for example, Mr. D of Delhi sold the goods to Mr. H of Delhi. Now you tell me, in the second case, H of Delhi, intra or interstate? Intra. Liable to pay what and what? CGST accepted. SGST or UTGST? SGST? Are you sure? Yes. SGST. SGST. Liable to pay. Good. Now further, example 2, referring here for your kind consideration. Example 2. Dear sir, here Mr. let us say L of Ladakh Mr. L of Ladakh sold goods to Mr. M of Mumbai. Tell me, brothers, liable to pay dash. IGST, CGST is IGST. You are excellent. I have no ambiguity here on your understanding. IGST. Excellent. Now I am presenting here, be careful, answer with the scrupulous alert. Dear sir, here Mr. L of Ladakh sold the goods to, let us say, Mr. N of Ladakh. Now in the given case, my dear, you please tell me in the given case, L of Ladakh from unitary where no state assembly sold the goods to N of Ladakh. In the given case, which levy attracts? IGST attract? Only UTGST attract? Or CGST, SGST attract? Or CGST and UTGST attract? ABCD. Which one attract? UTGST attract first? Okay. UTGST. Plus or only UTGST? CGST will attract? Are you sure? Excellent. Perfectly correct, my dear. UTGST and CGST will attract. UTGST only in replacement of dash. SGST. Wherever unitary, where no state assembly. Got the clarity, my dear sir? Any difficulty, my dear sir? This is, many of them do not know. One should understand, my dear sir. There may be a question in the examination on this. L of Ladakh sold the goods to N of Ladakh. Thereby, the levy of GST, A, IGST, B, UTGST, C, SGST and CGST, D, UTGST and CGST. Right answer, D. Is it clear, my dear sir? As simple as this. All of it clear? Yes. Now come back. This is what? This, yes, Amma. Any doubt, Amma?
Between two union territory also same. Between Ladakh and Diu.
Excellent. Have a, that point, let us have a doubt to clarify. We'll have one more point here, my dear. Your point is accepted. So, let us have a doubt. A transaction between two unitaries which has no state assembly. Yes, example 3. Yes. Example 3. There I am presenting, my dear sir. Let us say, Mr. L of Ladakh sold goods to Mr. let us say D of Daman. Let us say both are UTs. It is UT. It is also UT. No state assembly. Which will levy? A, IGST levy. B, UTGST levy. C, UTGST and CGST levy. D, UTGST and IGST levy. UTGST and ITGST levy. Which levy will levy here? Only IGST attract. Only IGST will levy. Got the clarity, ma'am? I will say only IGST will be levied. Got the clarity? Only IGST will be levied. A transaction between two different states, interstate level, cross-border transaction it is, between two states. Is clear, my dear sir? So, with this, we got clarity on this issue. Am I right, my dear sir? Revenue source to the central government, state government. CGST, revenue of the central. SGST, revenue of the state. UTGST, revenue of the unitary, where there is no state assembly. CGST goes to central government. IGST, levied by government, further apportion between central and states. Is it clear, sir? As simple as this. We have how many states, my dear sir? 28 states and 8 union territories. Out of the 8 unitaries, 5 unitaries, we have no state assembly. 3 states of unitaries has state assembly. One is called Delhi. Second one, Pondicherry. Jammu and Kashmir I have not referred. Why not referred means state assembly yet to be formed there. After bifurcation of the Jammu and Kashmir into 2 UTs, one is called Jammu and Kashmir and Ladakh. Ladakh UT which has no state assembly. When you talk Jammu and Kashmir, though unitary, it has state assembly concept. Elections set to take place over there. Now, the presidential rule is going on there. Jammu and Kashmir is a unitary. If tomorrow, day after tomorrow, election takes place, state assembly will form, and obviously, we can call SGST applicability. Even now also, in the state of Jammu and Kashmir, though state assembly yet to be formed, transaction took place within the state of Jammu and Kashmir. What is going to levy? CGST and SGST. Let us have that also one example. Put in a good format. Somebody will do it. Sir, there is no state assembly as of now. As of now, not there. Tomorrow will be there. Government very clearly said. Even before Jammu and Kashmir bifurcated into 2 states, only Jammu and Kashmir when the state assembly was there, SGST Act was enacted there. In the year 2017, when they introduced the GST law, Jammu and Kashmir, as a state government, that state assembly, that time, passed the GST Act. Well applicable SGST is there already. Clear, my dear sir? So that also let us have. Let us have one example. Example 4. Example 4, where even today scenario, Mr. J of Jammu and Kashmir supplied services, let us say taxable services, supplied taxable services to Mr. K of Jammu and Kashmir. Mr. K of Jammu and Kashmir. It is intrastate supply. What will be levied, my dear? Yes. SGST and CGST will be levied. In the state. Got the clarity, my dear sir? Any difficulty in the given case, my dear friends? So, we have concluded the provisions up to this. Is clear, my dear sir?